Good evening. This is the Elliott Wave update for the S&P 500 and the NASDAQ 100 for Tuesday, September the 5th, 2023. We ended up having a pretty much sideways day. And just to kind of catch up, we had two Globex sessions with our regular session market being closed yesterday for the holiday. So we had a Globex session on Sunday into Monday morning, and then we had a pickup yesterday afternoon into this morning. And both combined, I believe that the volume coming in, which would included the two Globex sessions, the volume coming in today, I think stood at about in the S&P, I believe maybe upwards of about 250 to 300,000 contracts. So still kind of light volume throughout the day, sideways move, coming back down and testing 4,500. In fact, as we open here in Globex, hugging it, sitting right at it, dropping just a little bit below, coming a little bit above. Not much going on. And this seems to be what is maybe likely until we get more economic data, which signals a little bit stronger message as to the possibilities of what the Fed may or may not do. Now, any equity trader, any trader that's in equities who happens to basically say, which I did hear, that there was an article out there that it's the bond market that's out of sync with the equity market. And that I'm just going to come out and say, in my mind, that's backwards. It is the equity market that is out of sync with the bond market, with what is being said to us about interest rates, as we see the yield on those bonds continue to rise. And that's not just the 30, it's the 30-year bond, the 10-year note, the 5-year note, the 2-year note, et cetera, et cetera. And then we got additional auctions today for the 26-week and the 13-week Treasury bills, which are now about 5.3. So interest rates continue to go up, but the equity markets wants to hang on to, well, they're finishing. This is all finishing. So we need to step back into the market. And then again, today, what we essentially saw, we saw the Dow and the S&P actually lower, the Russell getting hammered basically today, but the NASDAQ starting lower, working its way up to being up 50, 60, 70 points, and then dropping back into the close. As again, first Tuesday, right? Yes, it was a holiday. First week actually of September, 401k money, IRA money being placed into the market. And it seemingly felt today that anything AI and then plus, so they came back into tech pretty heavily, actually, with Apple, cruising higher. We saw AMD catching updraft, Google catching an updraft, Meta, Microsoft, NVIDIA, and Tesla. So money being brought back into the market via those underlying stocks. Now, again, I think that it's the equity markets that are out of sync with the bond market, and what the strong message that's really coming across is not going to necessarily fit. And that higher interest rates, again, pecking order, interest rate sits up at the top, folks. Whatever happens in interest rates filters down through everything else. It's what you got to pay to borrow money and what you're going to get if you lend the money. That's what guides everything else, not equities saying, well, we determine what interest rates are going to be. No, it doesn't work that way. So having said that, I think the market is really just taking a pause here. So we can call it consolidation with the possibility that we're still going to have an upside move. So you'll notice I've not labeled anything. And the reason is because it's still very unclear. we're not really breaking down, and we're certainly not deciding to put in a stronger rally to get us above 45.51 and on up to where I believe that if indeed there's still upside to do, it should be capped and completed upwards of 45.82. Now, the breakdown, I can continue. See, I'm leaving it open, so that still could be a 5, or 5 is still in progress. But as I said yesterday, the market really needs to give up 4,500 and start heading lower. And that's going to be our signal that we're all done. Minor wave 2 is done. We're dropping in a minor third. And again, what the signal is also going to be getting a lot of support, because we're going to just start to drop. As we're moving sideways, uncertainty, consolidation, still believing in that we still have upside to do. Whatever the situation is, it continues to hold the market at a higher level. So, same story. Continued downside, we should find support, and this is all going to be basically price support, 44.95. We've gotten as low as, I believe, 98, 99. I think during our session, it was also 99. So we're not really moving pretty far enough below 45.01. So we have that support at 45.93 and 95. And then it drops, and we have the 200 period EMA, the hourly 200 EMA, at 44.92.91. Now, we cease to have the price support because of that strong rally that we had at the end of August. So with that in mind, our support is going to come via the moving averages. So again, 44.91, a break there drops it down to 44.80. So 80 to 82, around in that area. And then what we have is a quick drop in support, at least on a price basis, and that's at 44.53. And then we have 44.47, so let's call it right around 44.50. Then it drops to 44.23. And then again, that matches up with here. We got a little bit at 28. We got a little bit again at 28. And then we start down here at 10. So we're going to have light support coming down. One other thing that, just because I know this is what algorithms and a lot of traders would do, we would connect what we would consider 5 waves, right? I don't have confirmation of it, but from that low to the high, and then we can also pull in some fib support. Again, how strong? If we're done with minor 2, I don't expect it to be very strong at all, but nonetheless, 44.80, so that goes along with our 200 SMA, and then 44.50, 56, that goes along with this price support. 35 goes along with, we have a little bit right there at that low. So we have some additional, like 34, 33. And then you'll see that it kind of lines itself up to where we have price support. So 4,400. And again, my thought process remains the same, that if we really start to drop below 44.45, so we're heading towards here, it pretty much is going to seal the deal for me in terms of that minor wave 2 should be complete, and that we are heading into that first 5 down to start to form minor wave 3 down. But until such time as we start to break down, here are some support levels, and we could get fine even as we're breaking down. These, I would suspect, they may provide a pause in the market, but if the selling gets strong enough, it should go through it. It may pause, bounce, and keep going in the direction. That's going to signal us that we're dropping in a third wave. And it could be building, folks. If this is minor wave 2, 1, 2, 1, 2, or this is a strange little, just a bunch of nesting 1, 2s. Again, that would be typical action for a third wave. But I'm not calling it that because it starts to get real funky and move sideways and get consolidation versus dropping. So everything remains on the table, basically. Moving averages, They're not really. We got the 50s turning lower, and that may be supportive of a continuation to the downside. The moving averages are basically, we're gonna just see the 20, the 4, the 8 are below the 50s. That is a little bit more supportive of continued downside, but we got the 200s kind of starting to get flat right here. So they're going to provide support. And if we go through it, then we'll get that crest and that turn. And as we get the 4 and the 8 starting to break. Now, just to kind of look on the daily picture got a little bit more to the downside, but see where it's resting? Right on the 4, and it's got the 50 SMA right below it. And then the 8, and then the 20. So we do have a lot of moving average support, as well as just that other support that I put in. So again, that also, what those fibs match up to where a lot of these moving averages are. And quite often we'll find that that's the case. So the daily with the moving averages, yeah, see, it's resting right there. It did not close below that level. If it did, it would be breaking that 50 SMA, and then we might see some really, punches to the sell side. All right, over in the NASDAQ. NASDAQ continues to just be, the shining beacon in the storm, I guess you could say. So what I've done, and this is just a possibility, I'm not really fond of this particular count, but I shifted the 3rd up to here. And now this is the 4. Now that's keeping alive that we still have got that upside jaunt to do. And whether that takes us up to, let me see if I got all my fibs in there. Actually, no, I got to replace one more. And that's where, if we're still doing a wave 5, but it's starting from a much, not super higher level, but a higher level than what I was anticipating, like that back before I had it here, and it would come up to here. It's going to change that upside just a little bit. So let's replace that as well. So it's not that we're really, oh, all right, well, let me try that again. It's not that I'm changing the count or really, making it so that we have substantial more upside. That would come via the alternate view, which still is out there, but not really getting confirmation either way. But if we look at this, so it does push it up. Even the 618 gets us to just below that, what would be that wave 3 high. And I would imagine if we get up there, it's going to be aiming for 650, 655 anyway. So we might get that overflow and get it there. But then again, it all depends on the structure. So we have that. Then we have 15,751, which takes us out to the larger minor wave 2, and where it would be equal to, or it would come in as retracing 78.6% of that minor wave 1. And then above that, we have the minuet wave 5, comparing it to minuet wave 1 would be equal, we would find equality at 15,793. So again, under either count, if this just kind of gives up the ghost here, then it's going to be 1, 2, 1, 2. No, can't, right? Because it's 1, 2, and this would be the other one. So that's out. That's out. So it's left as 3, which is why I moved the 4 over. So again, the market continues to throw us a little bit of a curveball, but that's okay. We can make our adjustments, readjust expectations, but still, I'm not moving away from that. I'm believing that we are still in a minor wave 2, A, B, and we're in the C wave. I'd be looking for that C wave to, now, unfortunately, that C wave, because we went past the 100%, and I believe because that's going to be right in here somewhere. Let me just put it back so I can double check. Put the 1 up. Yeah, it's over here. So it actually found a little bit of resistance there, but the next one for the C wave in terms of fibs comes in at 16,062, right where the previous high. And it could. That would make it, and it doesn't fit necessarily, but it can. It can retrace up to 100%. Just can't exceed it. So that would be for the C wave. I'm feeling that as we count this out, even under the additional adjustments made today, still comes in below all that. So 15,793, 15,751. Now that's a little bit of a cluster. And so I'm going to be looking there. All right, moving average wise, it is still, these are kind of still angling a little bit higher. Slip it out to the daily and take a peek. I'll come in here. I really got too many lines, so I can't even see it, but I can. See, look at that. That was what today produced. A big cross. Bullish, right? It's green. But compared to that, now we got the opposite. So consolidation, not that exciting at all. Moving average is still in place. We did come down at one point today and broke below the 4, came back close above it. So again, the market's continuing to hang on. And so we got to go with it. The moving averages are still kind of pointing. They're cresting and they look like they want to roll. But right now they're all still kind of pointing up, and they are still, no, actually they're not totally in alignment. We got that 50 SMA, the daily 50 SMA at 375, and the 20 is below it at 300. All right, that's where I'm going to complete it up for today. Our next update will be on Wednesday, September the 7th. The 6th.